So we are coming to look at what we call bank reconciliation statements. Okay. It's a very simple, and basic something that you have to understand. It's not anything big. Okay. So we are looking at bank reconciliation statements. Okay. If you talk about bank reconciliation statements, we need to know two things. Okay. You need to understand two things. You need to understand what we call cash book. You need to understand what we call cash book. And you also need to understand what we call bank statements. Okay. You need to understand what we call the cash book, and you also need to understand what we call the bank statements. Yes, cash book. What is the meaning? Cash book. We have done day books, and we say that cash book is a books of original entry at the same time a ledger. What is a cash book? What is a cash book? Yes, yes. Cash book. Yeah, Cinema.
A cash book is a subsidiary books which is used to record only cash transactions.
If they say the cash book, we should be thinking about a double column cash book, not the single one. So you should be thinking about a cash book that is going to be having a cash column and a bank column. Okay.
Okay.
All right. So if you say cash book, we are just talking about is a book that is used to record receipts and payments of transactions in cash or in check. So if you're using a cash book, we are going to be having two column cash book. We'll be having a cash column and then a bank column. But under the bank reconciliation, we are going to be paying attention to the bank column because it's going to be the transaction that we are having in our bank account and in our cash book. So it will be the bank column. Okay. It will be the bank column. Okay. So if you say the cash book, we are just talking about cash book is a subsidiary book at the same time a ledger. We use cash book as a day book, and at the same time we use it for the double entry, which is a ledger. Okay, so cash book is a book that is used to record receipts and payment of what? Cash or what? Check. Or is a book that's used to record transactions involving receipts and payment of cash or check. Yeah, that is very simple. You don't have to say anything. Okay, so the cash book, we have a single column cash book. We have a single column cash book, which is going to be the cash account or the bank account. We also have the double column, which is going to be the bank and the cash in the same cash book. Then we have the three column cash book, which is where we are going to be adding discount allowed and discount received to them. All right, let's come to, so who is going to be preparing the cash? Who is going to be having the cash book? Is it going to be the bank or the company? The bank reconciliation will be between the company and then its bank. So which of these people will be preparing the cash book? Yes.
Entity.
Okay. So it is a company that is going to be keeping the what? The cash book. Okay. Let's come to what we call bank statements. Who prepares the bank statements? Who prepares the bank statements?
The bank.
Okay. So what is a bank statement? Okay. So if you talk about bank statement, we are talking about statement prepared by the bank issued to its customer who is always going to be a current account holder, showing all the receipt for the period and also all the payment for the period. So it's just what a statement prepared by the bank given to the account holder, which is always going to be a current account holder, showing the transactions that took place within what particular period. So the bank statement always is to be given to you on monthly basis so that you can actually update your cash book. Okay, what is going to happen is that what mostly happen is that, okay, there will be certain transactions that will be on our bank statement. This transaction is between the company and the bank. So there will be certain items on the bank statement which we are not going to be finding or which will not be found in our cash book. The same way there will be some items in our cash book which will not be recorded by the bank or which will not be reflected on a bank statement. So what we have to do is that we want to now reconcile our bank account balance with what our cash book balance, which is going to be the bank column. If you put money in the bank, okay, if you make sales by check, okay, sales by receiving what? Check. So let's say we have sales by receiving by check of what? We made a sales and we receive a check of 20,000. Okay. How do we record this in our bank account? In our cash book, what do we do? Are we going to be debiting our bank account or we credit? Are you going to be debiting our bank account or we credit?
It will be debiting it.
Okay. So if we are debiting the bank account, this money will go to the bank. So the bank will not be crediting our account. So if the company is putting money in the bank will debit, the company will debit its bank account in the cash book, but the bank will credit the company's account because the bank has to do the corresponding entry. So the company will debit the check received, the bank will credit the company's account. So whenever you say that, okay, the bank has debited the company's account, it means that is a payment for for the entity. The bank has made a payment on behalf of of the company. That's why you see your account has been debited by this. If they say the account has been debited, it means that you have to credit that particular or record that particular transaction in your cash book as credit. All right, let's come here. Okay, let's come here. Let's come to the basic level before we move on to the issue about the cash book, the bank reconciliation statement. It's a very simple thing, and within 1 hour we can finish. Okay, so let's come here. You have given, okay, let's say A is your sister. You have given 500 to your sister to keep for you. So you are the B. Okay. So to you, how much have you given to your sister? To you, how much have you given to your sister? Okay. You have given 500 to your sister. Your sister will be holding the 500. And to you also, you have given 500 to your sister. Okay. You have asked somebody. Okay. You have asked your brother to go and take 200 cedis from your sister. Okay. You have asked your brother to go and take 200 cedis from your sister. To you, how much are you going to be having with your sister? You have instructed your brother to go and take 200 cedis. So to you right now, what will be the balance that will be left with your sister? To you, it will be 300, isn't it?
Yeah.
Okay. It will be 300. Okay. It will be 300. But what happened is that, okay, you have, to you, it will be what? So let's come here. To you, you will be having, to you, who is the A, you assume that your sister will be left with 300. Okay. 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 Someone also has paid you 300 cedis, and you ask the person to go and give the money to your sister. Okay. So to you now, how much will be with your sister for you? Someone has paid you 300 cedis, and you say that the person should go and give the money to your sister. To you, how much will be left with your sister for you?
600 cedis.
Okay. That will be 600 for you. Okay. All right. Now your sister is telling you that she's having 500. Okay. The question is, you'll be asking why. Why are you having what? 500. You'll be asking your sister, why are you having 500? She'll say, oh, the money that you have given to me, that is the money. Then you ask, oh, I told someone to come and what? I've asked our brother to come and take 200 cedis from you. Your sister will say that no, nobody came to what? To take the 200 cedis. Okay, you say, oh, Kojo has paid me 300 cedis. I've asked Kojo to what? To go and or to bring the 300 cedis to you. Your sister will also say that Kojo didn't bring any money to me. Okay, so you want to know the amount that you want to get the amount that your sister is having. which is what we call you want to reconcile. To you, you are having 600 cedis. Your sister is having what? 500 cedis. So you now want to reconcile. Okay, reconciling means that you want to know the balance that your sister is having. You want to get the 500 that your sister is having. Okay, or maybe your sister can say she wants to reconcile. If she wants to reconcile, then she will now what? She will now subtract and add those transactions that are supposed to be subtracted, that's supposed to be added. Those money that's supposed to be added and those money that's supposed to be subtracted. She will now add and what? Add and subtract those ones. But you want to reconcile. You want to get a 500 cedis that your sister is having. You want to reconcile your balance with whatever your sister is having. Okay, let's come here. How did we get the 600? This is how we get the 600. So the money given to your sister, we can say that is a balance. Okay. So, but money given to your sister is 300. So what do you have? What happened? So you ask your brother to go and take what? To go and take 200. So we have subtracted that, isn't it? Okay. So now, Kojo paid you 300 cedis. Okay. This how can we got the 600, isn't it? Okay. So you now want to reconcile. You want to reconcile with your sister. You want to say, so how come you're having 500? So let me also have the 500. Let me also reverse the transactions that are recorded that were not recorded my sister, or that were not recorded by my sister. That is the thing that is causing the difference. You can see that what is causing the difference between the two balance are those transactions that you have captured, which were not captured by your sister. But since they were not captured by your sister, you have to now also assume that they were not captured by you, because that is the thing that is causing the difference. So what you do now over here is that, okay, you have the 600 as the balance. Okay. This 600, I've received what? 300 from Kojo. So the 300 has been added to that particular figure. So what I will do is that let me subtract the 300, because you can see that the 300 over here is added to the 500. That's why we are having the 600. So since my sister has not captured the 300 cedis, it means I have to reverse the 300 cedis. I have to reverse the 300 cedis. Okay, I've subtracted. I've also asked my brother to go and take 200 cedis. So since my brother didn't go for that money, it means that that money should not be taken from the money that I'm having. So what I'll do is I'll come here and add the 200 cedis. So I will subtract the money that I've added to my balance. Then I will now come and add the money that I've subtracted. Okay, so you will now be having the 500 with your sister. Okay, so if the transaction has not been captured by one person and it has been captured by you, you just have to go and reverse that, because that is the thing that is causing the difference. You have received 300 from somebody and you have added it. Your sister have not added it. So go and subtract it. Go and take that money back from it. You have asked your brother to go and take 200 cedis. Your brother didn't go. It means that that money should not be subtracted. So you have to come and add it back. This is how we do the reconciliation. Okay, this is just the basic understanding of the reconciliation. So you see that you will be seeing, those of you that have written financial accounting before, or you have done financial accounting at the basic level, you'll be seeing something like uncredited check, and you'll be seeing something like unpresented check. Okay, this case, this is a money received by you that your sister is supposed to receive and add it to your money. But your sister did not receive this particular amount of money, so this now become uncredited what? Check, if your sister is a bank. Okay, now you have also asked your sister to pay somebody. So this is now a payment to you to pay your brother 200. Your sister has not done that. So this will become, so we can call this one unpresented check. So it means that you have ordered your brother to go, your brother did not go, or you have signed a check for your brother, but he didn't present the check for payment in a bank. So that has not been what? That has not been captured. Okay, so basically this is the idea of the bank reconciliation. You are giving money to your sister. At the end of the day, the money that you are having, the balance that you are saying that you are going to be having with your sister is different from what your sister is having. So the two of you have to now sit down and do the reconciliation. Okay, I've asked Kofi to come and collect this money from you. So Kofi didn't come. Okay, since Kofi didn't come, it means that this money should not be subtracted. So let me add it back because Kofi did not come. Okay, if your sister wants to do the reconciliation, then they will say, okay, if Kofi should come, I will take the 200. So let me subtract the 200 from the money that I have. Okay, you have asked Kojo to come and bring 300 cedis. Kojo didn't bring the 300 cedis. Okay, so it means that this money should not even be added to the money that I have given to you in the first place. I have to go and reverse it. That's how we do the bank reconciliation. Very simple. Very simple. So what normally happen is that, okay, what normally happen is that a company will start business. Okay, a company will start business with what? With 2,000. So the company will have this in each bank account, and company will also have this 20,000 in the cash book. All things being equal, at the end of the day, the balance that you should be having in your account should be the balance that the bank will also be having. But in most cases, this will not be the same. Why? This will not be the same. If you are keeping 2,000 or 20,000 in the bank, and you're also keeping this in your records, if you are going to do any transaction to the bank will what? The bank will make the payment. So at the end of the day, the balance that you should be having in your accounts should be the same as the balance that you are having in the bank account. But in most cases, the balance that you are going to be having in your cash book under the bank column will not be the same as the balance that the bank will be giving to you on the bank statements. Okay, it is always going to be a difference because there will be some transaction that will be performed by the bank. You will never know that particular transaction until you have received what? The bank statements. The same way you can also ask people to go and pay some amount of money on your behalf, but the people will never go to the bank. So you have recorded the money already, but the bank is yet to what? To credit that. So it means that that money has been entered by you, but it has not been entered by the bank. The same way you can also receive a check from people, you enter it in your cash book, you send it to the bank, then the bank will now return the check that we call dishonored check. So you have already entered that particular check in your balance already, which has not been entered in the bank account. So this is also going to be causing what? A difference. So we are going to be looking at what are those factors that is going to cause the difference between the cash book balance and also the bank statement balance. Why I'm going to put 20,000 in the bank account, and at the end of the month, the balance that I'm having in my cash book under the bank column is different from the balance that the bank is giving to me. Meanwhile, we all have 20,000 at the beginning of the month. Why? We are coming to look at the factors, the reasons for that. So we look at the factors affecting or factors causing the discrepancies. Okay, so factors responsible for the question will tell you discrepancies. Okay, factors are available for difference between the cash book balances and that one. Anyhow, the English is not for us. Okay, so what are the factors? Let's look at them. Please, any question before we move on and pick a question? Okay, so the first one is what we call bank charges. Okay, so the first thing is bank charges. Okay, since you are going to be having a current account, okay, the bank is going to be charging you for the service that they are rendering to you. But these particular charges, you will never know it until you have received the bank statement. Okay, so the bank charges is actually what? The bank charges, will it be expense to you? If the bank is charging you, will it be expense to you or it will be an income to you?
An expense.
Okay, so assuming you know this particular expense, you should have taken it from your bank account, isn't it? Or your cash book, you should have debited this particular amount to the cash book, but you will never know the bank charges until you have received the bank statement, because the bank will perform a lot of transactions for you within the month. Then they will now come with the charges. So for the charges, you will never know the charges until you have received the bank statement. And this is one of the factors that make the bank statement balance different from the cash book. It is purely for the bank statement. So the first one is the bank charges. The charges that the bank is going to, or the interest that the bank is going to charge the company for what? Rendering what? Service to what? To the company for that particular period. So as a current account holder, the bank is going to render a lot of services to you because they will withdraw, the bank will be processing for you and they're withdrawing at every what? On daily basis, and they are going to charge you interest for that. And this is bank charges. Whenever there's a bank charges, it's a legitimate item that should have been charged against our cash book. But since we are not aware of this, it means that this has not been subtracted from our cash book. It's an expense that we are paying. So it should reduce our cash book balance. But since we are not aware of this, it means that we now have to adjust our cash book balance. What are those items that's supposed to reduce the cash book balance, but we are not entered? What are those expenses for the year that's supposed to reduce the cash book balance, that's supposed to increase the cash book balance, but we are not entered? So if you know your bank charges, it should be subtracted from your adjusted cash book balance because it's an expense. That should have reduced your cash book balance, but it has not been entered. So you will now come into what? Enter this now. So the first one is the bank charges. Okay. So we also have what we call standing order. Okay. Standing order is an order given by the company to the bank to make payment on your behalf at any time, whether you are available or you are not available. The bank should make what? Payments on your behalf at any time. So the bank is also going to be charging you for this one. So they will charge you a fee. So it's an order given to the bank to make payments at any time, whether you are there or you are not there, whether you are aware. They should just make payments at any time on your behalf. And the bank will charge you this in addition to what? Their normal bank services. So this will also be a charge, which should have been, it's an expense, which should have been taken away from our cash. We should have paid it with cash, but we haven't done that. So what will happen is that this will also be going to the cash book. So these are all cash book items. Okay. So this will also go to the cash book. So they are legitimate expenses that should be what? That should be charged against our cash book balance if we should be aware of them. Okay. The next one is what we call direct credit. Direct what? Credit. Okay. Direct credit. Sometimes you sell to people. Okay, you sell to people and you give them your bank accounts. So what they will do is that they won't inform you, then they will just go and pay the money directly into your bank accounts. They won't inform you, but they will go and pay the money directly to your bank accounts. Okay. Assuming someone is owing you 500 cedis and the person went directly to pay into the bank accounts, what would be the effect of this 500 on your cash book, bank balance in the cash book? Will it be going to be an increase or decrease? Someone is owing you and the person went directly to pay 500 cedis into your bank account without your knowledge. And the bank has now informed you that this person paid 500. Would this be increasing your cash book balance or it will be reducing your cash book balance?
It will be increasing it.
Okay. So this is also a cash book item. So this one, you just take the item and you ask yourself, is it going to be increasing the cash book balance or reducing? Is it an expense or income? Okay. So let's come to what we also call direct debit. Okay. Direct debit. Direct debit can be a transfer that the bank is making to a customer without your notice. Okay. So direct debit is just that the bank is paying somebody or the bank is transferring an amount to a particular account without your notice. So the bank will debit your account without your notice. Okay. Because of the standing order that you are telling the bank that they should pay at any time on your behalf, the bank can pay the person without your notice. And this is going to be payment. So if you should be aware that, okay, the bank has paid 500 to somebody. Okay. The bank has paid 500 to somebody and you are having 2,000 in your bank account. The bank has paid 500 to somebody without your knowledge. Okay. This is the balance that you are having in your cash book. Okay. As you are now aware of the 500 payment, are you going to be having the 2,000 in your cash as a cash book balance again? You have 2,000 as a balance. The bank has paid somebody 500 without your knowledge. Okay, now the bank is telling you that they have paid somebody 500 cedis. Will you be having the 2,000 as your cash book balance for bank again?
No, please.
It will reduce, isn't it? Okay.
Yes.
So this will also be a cash book item. These are what normal transactions that should have been entered in the cash book, but since we are not aware of them, that is why we don't enter them. So another one is what we call credit transfer. Okay, credit transfer. Credit transfer can be a situation where the bank will transfer a money from, maybe you are having two accounts, you are having deposit account and current account. So the bank has transferred money from your deposit account to your current account without your knowledge, and you are not aware. If you should be aware of that, that will also be increasing your cash book balance. Okay, you can also have what we call unpresented check. Okay, we call something unpresented check. The unpresented check are those checks that the company has issued to suppliers, but the suppliers are here to what? To present the check to the bank for payment. So this one is actually affecting the cash book balance. You are going to be entering the transactions in your cash book balance, but this will not be reflected on the bank statement. It will not be reflected in the bank statement. Why? Because the people has not sent a check to the bank for what? For payment. So what will happen is that you have done the entry in the cash book already. You have entered this amount in the cash book, but just that the people have not presented the money to what? Or they haven't presented a check to the bank for payment. So what will happen is that this will be a bank reconciliation item. So this will not go to the cash book again because it has been recorded in the cash book. So it will be a bank reconciliation item because it has not been subtracted from the bank statement. So what we do is that since we have subtracted it from our cash book balance, we have to go and add it back because it's supposed not to be subtracted because the bank has not subtracted it. We have to go and add it back. Okay. Another example is what we call uncredited check. Okay. Uncredited check. Okay. Uncredited check is also bank reconciliation item. What do we call uncredited check? What do we call uncredited check? It's those checks that you have received from customers which have been entered into the cash book, but the bank is here to what? It's here to record them. It can be a delay. You have sent a check to the bank, but it has delayed. So the amount has ended before the bank has sent the check. So they will not do the entry for that particular month. But you have already entered this particular transaction in your cash book as receipt. You have added it to your bank statement, but the bank has not added this one. So what you have to do is that this is part of your cash book balance. You have added it, but since the bank has not added it, go and subtract it from your cash book balance because the bank has not added it. So it is the addition that is causing the difference. So go and subtract it from your balance and now have the same effect as what the bank is having. Okay. There are plenty. I cannot even mention them. We have amount wrongly credited. Okay. So we have wrong debits. Okay. We have wrong debits. The wrong debit is where the bank has wrongly debited your account. Okay. The bank has wrongly debited your account. Okay. What it means is that, okay, you have 2,000 in your bank account. So in your cash book also, you'll be having 2,000. Okay. The bank has now, there's a transaction that's supposed to be going for FA. Okay. But since your name looks familiar, the bank has debited your account. The bank has subtracted the 500 cedis from your account. So on the bank statement, you are having 1,500. But you are not aware of this. But since the bank has already subtracted this figure, it means that you also assume that, okay, you have also subtracted this particular figure. So the bank has subtracted 500 over here. The assumption is that if the bank has subtracted the 500, you should also be subtracting the 500 from your balance and have 1,500. So the wrong debit will always be subtracted from our adjusted cash book balance. Why? Because the bank has subtracted that before getting the bank statement. Okay, since the bank has subtracted it, it's either we go and add it back because that amount should not be subtracted. But since we are not going to be adding it back, we want to know the bank statement as at the balance at the end of the year or the balance at the end of the year. It means that you also have to assume that you are going to be subtracting that figure because whatever happens in the bank must happen in your cash book. So the bank has subtracted 500. I have given you 500. You have given 100 to somebody mistakenly. So I will be thinking that you still have 500, but you have 400 and you have told me that, okay, you have given 500 to somebody mistakenly. Okay, I want to know, I want to get your 400 at my side. So I want to reconcile with you 400. So I also have to assume that I have asked you to pay that 100. So I also take the 100 that you have pay to the person from the balance I also have. So that the balance that the two of us are going to be having will count. Okay, so the wrong debit will always be a deduction from our adjusted cash book balance. Okay, so let's come to another one, which is the wrong credits. Okay, so which is what we call the wrong credits. Okay, please, if you understand how these things are, if you understand them, okay, if you understand them, you don't have problem. Okay, we call something wrong credits. Wrong credits. Okay, we call something wrong credit. Wrong credit means that you have 2,000 in your bank account. You're also going to be having 2,000 in your cash book. The bank has what? Wrongly credited your account. Credited your account means that they have added 500 to your account. So the bank has wrongly or mistakenly added 500 to your account. What are you going to be having? You'll be having 2,500, isn't it? The bank, on the bank statement, you will be having 2,500. Is that correct?
Yes.
Okay. But how much do we have in our cash book relating to the bank?
2,000.
Okay. So if we want to get a 2,500 now on the bank statement, what do we do to our 2,000? If we want to get the balance on the bank statement of 2,500, what do we do to our 2,000 so that we can get 2,500?
You add 500 to
Okay. So we have to add a 500. Since the bank has added that one, we also assume that the money belongs to us. So that will also increase our balance. So we have to also have to debit our cash book. So the wrong credit will always be added to what? To the adjusted cash book balance because the bank has added it. So we should also assume that, okay, we have also received that money. So we also add because we want to get the figure that the bank is having at the end. The bank has added the 500. We also have to come and add the 500. The bank has subtracted the 500 from our account. So we also have to subtract it from our cash book balance to now have the zero effect. Okay. We also have something that we call errors. So we also have errors, which will be an overcast. Okay. We are going to be looking at errors. So we can also have errors in the cash book so we have errors in the cash book. So there can be an issue of you have, instead of you debiting, you have credited. You have to correct that in the cash book. Okay. So maybe there was a receipt of 200. Instead of you debiting, you have credited the account with the 200. So it means that the 200 should have been at the what? Debit side. You are now putting 200 at the credit side. So the 200 is already there. It means that the 200 should have come here. So you come and put 400 over here. So that the 200 at the credit side will cancel this one, remaining the 200 that will be at the debit side. Okay. So errors in the cash book can also cause that. We call something dishonored check. Okay. Dishonored check. Dishonored check is a check returned. It's a check returned by the bank, which will always be insufficient. What it will be named insufficient fund. It means that the customer does not have what a lot of money to settle this one. What will happen is that, okay, if you have received money from a customer, how do you treat that in the bank account? If you receive money from a customer, what will happen? Are you going to be debiting or you're going to be crediting your bank account? If you receive money from a customer, would that be a debit or credit? Okay. It will be a debit. Okay. The check has been sent to the bank. Now they are telling you that the customer does not have enough funds to perform the transaction. So they will return the check to you. Okay. If they return the check to you, do you have to record the 2,000 in the first place?
Initially, it was recorded.
Okay. But they have now returned the check to you. It means that the money was not collected, isn't it?
So you have to credit it to cancel it.
Okay. So the money has not been collected. So you have to remove the 2,000. So dishonored check, if it is the bank that is the company that is receiving the check from a customer and the check has been returned dishonored, that will be what? That will be credited because the first one was debited. So we have to come and cancel because we didn't receive any money from the people. So we have to come and cancel. Okay. There are so many reasons for having a dishonored check. Maybe the check can be the check that is given to us can be a star check, which is a check that is more than 6 months. The check is more than 6 months, so we cannot cash out the check again. Maybe the signature on the check is different from the person's signature. The person can actually ask the bank not to pay. Maybe insufficient funds in the account can also cause what we call the dishonor check. Okay, we have so many things that we cannot see all of them. Okay, there's another situation also where, okay, where you will be paying the money to the bank account. Okay, you are now depositing 500. You are now depositing 500. You are now depositing the 500 into your account. So depositing 500 means that you have added the 500 to what? To your cash book balance. But the bank has now entered this amount in a different person's account. It means that the bank has not added this one to your account. So if you want to reconcile this, the bank has not credited the account with this one. So it means that the 500 is not part of the bank's what? Balance. But you have now added this one to your balance. So what you come and do is that it should be subtracted from your bank. So this is also treated as uncredited check because the check has been sent to the bank, but it has not been credited to your account. So it's just like uncredited check. So it has been added to your balance. Now you want to what? You want to reconcile. That has not been captured by the bank, so it should not be captured by you also. So you have to go and remove it. The same way you can also make a payment. The payment will be charged to a different person's account. You have made a payment. So you have taken the 500 from your account already. Okay, you have 2,000. Okay, so you have taken 500 from your 2,000. The bank is also having 2,000. Okay, but so you have made a payment of 500, so you'll be having 1,500. But instead of the bank taking the 500 from your account, the bank has taken the 500 from a different customer's account. So it means that you are going to be having the 2,000 on your bank account again. But in your cash book, you'll be having 1,500. What do? You come and add the 500 that you have taken back. So you just assume that no transaction has happened. So 2,000 against 2,000. So you come and add the 500 that you have taken to the balance of the 1,005. Then you now have the 2,000. So situation where the company has made a payment, but the payment has been charged to a different customer's account, it will be treated as unpresented check. It means that we have made a payment, the payment has not been captured. So we have to reverse the payment so that we can have the same balance as the balance that the bank is having. Okay, so those are some of the examples. Let's look at the formats. Okay, although I don't really do the formats. Yes, Madison.
Okay, so, what if there is an, let's say, overcut? So no, let me explain.
They are all captured in the errors.
Let's say,
Okay.
so error.
Yeah,
So that doesn't mean be under.
it can be under, it
If
can
you have
be
to
over.
pay 300 cedis.
Yeah.
So if you have to pay 300 cedis, but instead you pay 330.
Okay.
So the difference becomes 30 cedis, right?
Yeah, that will be captured in the adjusted cash book. Okay. So they
So
are
as what?
you capture it as an error. So you just
Okay.
reverse the figure as an error. So they are all captured in the error. Okay. So they are all captured as the error in the cash book. Okay. So this one, you see, this one I cannot give you a format because for the cash book, a lot of items can come there. Okay. We have already closed. Okay, we have already closed our cash book. So since we have already closed our cash book before we have received the information, then we have to prepare what we call adjusted cash book balance. Okay, we have to prepare what we call adjusted cash book. So the adjusted cash book, you always start with the balance that you have from your cash book, the closing balance from your cash book. It means that you have closed your cash book. Now that is a balance. Some figures should have been added before getting that balance. That figure have not been added. So you come and add those figures to that one. Some figures should have been subtracted, but that has not been subtracted. So it can be the balance it can be an overdraft or it can be a positive balance. Okay. So you can be having maybe errors over here. Okay, so you can have errors over here. It can be undercast or overcast. Then you can also have the direct credit here. So the direct credit means that the customer has what? Has paid the money into your account without your notice. If you should have been aware of that, that should have been debited into your what? Cash book account. But since that has not been done, it means that you will now come and debit it. So we have a direct credit. We also have what we call a credit transfer. Okay, an amount has been transferred to your account. We also have that. We can also have dividend received. There can be other income that is received by the bank on your behalf. So those all will be increasing. So what I want to say is that anything that will increase your cash book balance, we should have, if that particular item should have been captured during the month, that would have increased your cash book balance. They should be debited. Those that will be reducing your cash book balance, if they should have been what? Captured during the month, they should be credited to the adjusted cash book balance. So example will be the bank charges. So the bank charges is an expense. But if we should know this amount first, it should have been subtracted from our balance before getting the closing balance. But since that has not been subtracted, it means that we have to now come and subtract it from our closing balance. So we have the bank charges here. We have the direct debits here. Okay. We have the dishonored check. We have dishonored check. We have our standing order, which will also be expense to the entity. So we have standing order. Okay. So we can also have errors here. Okay, that will also be here. Then we can have, at the end of the day, you close it, you can have a closing balance. Then you now count what we call the bank reconciliation. Okay, the figure that you are having over here is supposed to be after you have taken the necessary corrections into consideration. Those things that have been captured in the bank statement, those things that have been captured on the bank statement, that should have been captured in your statement of financial position. After those things have been captured now in your bank statement, your cash book balance, your adjusted cash book balance should be the same as what? The bank statement. But this will not be the same again. Why? Because certain items have been entered in the cash book, but they have not been entered in the bank statement. So you now use those items now to reconcile. One of them will be the unpresented check. One of them will be the uncredited check. One of them will be the amount wrongly credited to your account. So after this one, the balance that you have over here is supposed to be the what? The bank statement balance, but it will not be because of the unpresented check and uncredited check. So you have to now prepare what we call bank reconciliation statement. Yes, Madison.
So please, what about you have the bank interest, the one that it is in your favor, and the one that you are supposed to pay for, let's say, the overdraft. So there will be, let's say, bank interest on those kind of payments. How do you see that one too?
Anything that is
The
going to
bank,
anything that is going to be reducing your cash or your amount in the bank should be credited to your cash book, adjusted cash book. Anything that is going to be increasing your bank balance in the bank account should be debited to your adjusted cash book. So if you know, just know the impact of the item. So if you are paying bank interest, it is going to be reducing you are going to be paying out of the money that you have in bank. That is going to be reducing your cash book balance too. Since your bank balance is reducing, it automatically your cash book balance will also be reducing because you're having the same amount. So you credit your cash book. If you are the one receiving the interest, your bank balance will be increasing. So your cash book balance, which is a bank balance, will also be increasing. So you debit. All right. So we have the bank reconciliation statement. Okay. So the bank reconciliation statement depends on what you are looking for. Okay. Depends on the figure that you want to reconcile. But mostly, what happens is that we normally adjust with what we want to reconcile with the bank statement balance. So we always be looking for the bank statement balance there. So you have your so you bring your adjusted cash book balance. So after all the adjustments, after I've adjusted for everything and the bank is still not balancing, it means that there's something that have been done before getting this balance. So I'll have the adjusted cash book balance or balance as per adjusted cash book. Okay, so you bring it over here. Okay, you have an item which we call unpresented check. Okay, so you have 2,000. You have 2,000 and you're having 2,000 with the bank. Okay, you have paid 500 to somebody. Okay, and you are now having 1,500. But the person did not go to the bank to what? To cash out. So the balance that will be in the bank account for you will still be 2,000, isn't it? But in your cash book, how much are you going to be having? In your cash book, how much are you going to be having?
Fine.
Okay. But you want to now get 2,000. You can see that the bank statement is 2,000, but you're having 1,005. So you want to now get a 2,000. How do you get a 2,000? How do you make your bank balance to now be 2,000? Your cash book balance for the bank should now be 2,000. Your balance is 1,005. How do you make it to be the same as the bank statement balance of 2,000? Yeah, I can't hear you. How do you make it to be 2,000? You have 2,000, you have paid somebody 500, but the person has not gone to the bank to take the money. So you are still having 2,000 in the bank. I want to reconcile your cash book balance against the bank, which is 2,000, and your cash book balance is 1,005. How do you make your cash book balance 2,000, which will be the same as the bank statement balance? How do you make it? Yes, Ines, how do you make that? How do you make the 1,005 to become 2,000?
Maybe
Sina, your listening is not coming. It's not coming. Your voice is not coming. Sina, listen. Are you using earpiece? If you're using earpiece, then take it off and speak normal. Please, how do we get a 2,000, 2,000?
So I think the previous transaction should be reversed since the person has not taken the money.
Okay. So you can see that the 2,000 over here, the 1,005 the 500 has not been taken. So since the 500 has not been taken, it means that the 500 should not be subtracted in the first place. So you come and add your 500 back. What are you adding now? You are adding the unpresented check to your what? To your adjusted cash book balance, which is 1,005. So unpresented check will always be what? Added to unpresented check will always be added to your unpresented check will always be added to your cash book what? Adjusted cash book balance. So maybe you can put it here as so maybe you can have so many unpresented check. So you also have what we call the wrong credits. Okay. What do we call the wrong credits? Let's come here. You are putting 2,000 in the bank. Okay. And so if you are putting 2,000 in the bank and you're also keeping records. So if you put the money in the bank, you also keep records of it. That's what we are talking about. So in your bank account, you'll be having 2,000. In your records, you also be having 2,000. Okay. So in your records, you're having 2,000. But the bank has now wrongly what? Credited your account by 500. Crediting account wrongly means that they have added what? 2,000. They have added 500 to your account. The bank has wrongly credited your account with 500. Okay. So you can see now your balance will now be 2,000. The bank will be having 2,500. So how do we reconcile now? We want to know the balance. We want to get the bank statement balance of 2,000. What do we do to our balance to get a 2,000? How do we do to our balance to get a 2,500 rather? We have 2,000. What do we do? What are we going to do to what? To have the 2,500 as shown by the bank statement?
I will debit our cash book.
Okay, so it means that we have to add 500 to our balance, isn't it? So wrong credit will always be added to your what? Your your adjusted cash book balance. Sometimes the adjusted cash book balance can be what? Can be the adjusted cash book balance will be negative. Okay, the adjusted cash book balance will be negative. It will be overdraft. What you do is that you just have to show this one as positive. Don't change it. Sometimes if you see some books, they will change it for you that, okay, you should, since this is negative, that is why they are adding, they will ask you to add an uncredited check because the accredited check is also a negative. We are subtracting. So you add negative together. That's why they say they are all negative. So we put the two together. The same way you can also make this figures positive, but this will be negative plus positive. So the figures will be reducing. Then you will now subtract the uncredited check and other ones from it. You'll be getting the same answer like the person who changed it. So I will show, let me just see if I can get a question and show that. Okay. So we have amount wrongly credit. Then we can also have a situation where you make payments, payment wrongly credited to a different customer, wrongly debited. Okay, so sometimes we can have a payment that we made a payment, so it has been captured in our cash book, but instead of the bank subtracting it from our amount, they have now charged that particular amount to a different customer. So it means that our amount has not been attached, our cash balance or our bank balance has not been touched at all. The subtraction was not done. So, but we have done the subtraction already. So for us to do that, we have to reverse what we have done. We have to reverse what we have done. So payment wrongly debited to a different customer. Okay, to a different customer. It's different from a wrong credit or a wrong debit. A wrong debit is the transaction is not relating to you. You have nothing to do with the transaction, and the bank has wrongly credited that one. But another wrong credit is that the amount relates to you, but it has been credited to a different customer. So the wrong debit can be in two forms. One of them will be affecting the entity, and one will be affecting a different person. You have to assess and know how to account for the two. Okay, so we add it over here. We have our balance, then we have our balance here. Then these are the transactions. We have added certain figures. We have added certain figures that has not been captured by the bank. So we have to reverse it by subtracting. So the first one will be uncredited check. So the uncredited check can be like 2 or 3. You just have to list them. Okay. So we have the uncredited check, which will be a subtraction. So you can have wrong debit there. Wrong debit means what? Wrong debit means the bank has wrongly charged a different person's withdrawals to account. But since these have been subtracted from the bank account, we should also go and subtract it from our cash book. So we bring it over here as a wrong credit. The same way, it can also be a receipt. You can also pay receipt wrongly credited to a different customer. So receipt wrongly credited to a different customer. Okay, so the money belongs to us. We have received the money from a customer. We sent it to the bank, but the bank has credited the amount to a different customer's account. It means that the money has not been added to our bank account, but we have added it to our cash book. So if you want to reverse this, we want to now know. So what are the transactions that we have done that are not done by the bank? We reverse it. What are the transactions that have been done by the bank, which has not been done by us? We now have to carry out that one because we want to know the balance for the bank. So this has been entered in our cash book, but it has not been added to the bank balance. So it means that it's not part of the bank statement balance. We have to go and reverse it. Reversing it means that we have to go and subtract. It was first added. So we subtract this one over here, and we have our balance as per bank statement. Very simple. You don't have to stress yourself. But for me, I don't really do with the format. I believe in understanding. If you understand the statement or the transaction and you know the impact that particular transaction is going to be having on your bank balance, you don't have anything to do again. So for me, I believe in understanding the items and then the impacts that particular item is having on your cash balance and also on your bank balance. Then you now do the adjustments. So let's pick at least 2 questions and see how we can go with these transactions. Okay, let's pick 3. Let's try to pick 3. Okay, let's pick 3. Okay, so what we do is we are going to be, so we take question 1. We have to move from simple to complex. We take question 1, then we take question 3, then we take additional question where they will give you a statement on their own. So we take this one, question number 6. So you have to match certain items on your own. You have to match certain items on your own. So let's take that. Let's see whether we can solve the 3 questions. Please, are you okay before we move on? All right. So let's pick question 1. Yeah, very simple. Let's kill that one, then we move on.
Okay, I'm reading. Dairo Limited maintains a business bank account with Fidelity Bank Ghana. The bank statement received for the month of March 2021 shows a balance of 14,365 Ghana cedis to his credit, while his cash book showed a balance of 13,380 Ghana cedis debit. Subsequent investigation revealed the following. E-check A001 for 3,400 cedis and X224 for 6,000 Ghana cedis deposited to the bank on 28 March 2021 were not credited by the bank until 2nd April 2021.
So what check is this one?
Uncredited check.
Okay, so you have to be able to identify those ones. Those transactions has been entered into the bank account already, so you don't have to go and enter into you don't have to go and enter it in your adjusted cash book again. So what are they? They are asking us to prepare adjusted cash book, isn't it? So you can just put your,
Yes.
let's go and have our adjusted cash book. Okay, so A. So we have the adjusted what? Cash book. So we start with the balance. So the balance over there, is it a debit balance or a credit balance? You always
Debit balance.
okay. You always start with the closing balance given to you, because that's after we have done the necessary one, that is the balance. But we should have taken certain items before getting that balance. But since those items has not been taken, we now come and charge it against the balance here. So how much is the balance there?
13,380.
Okay, 13,380. So we have 13,380. So the first transaction is uncredited check. It will not count to the bank. It will not count to the adjusted cash book balance because it has already been entered into the what? Into the cash book already. Let's take the second one. Yes, Naima.
The check of
Okay, I'm sure it's a mistake.
No, I had wanted to ask, maybe as time goes on, you clarify.
Okay.
The question is that how will you identify that this particular transaction goes into the adjusted cash book or this one goes to the bank reconciliation?
Okay. They say two checks for this one deposited to the bank on 28th March. We are not credited by the bank. We are depositing that. So it means that we have already entered this particular transaction. We received the money from the people. We received the check from them. So since we received the check from them, we have done a double entry. We debit our cash book, the bank column, then we credit what? The customer's account. But we have sent the money to the bank now. But the bank is yes to what? To carry out the transaction. So uncredited check, unpresented check, they have already been entered into the cash book already. They have already been entered into the cash book already. All right. So yeah, second one, senior.
check for 6,500 cedis issued to Dango Limited had not been presented for payment.
This is what? Unpresented what?
Yes.
Okay.
Check.
So let's move on with that.
Okay. A check received for 3,000 from a customer in full settlement of a debt of 3,300 had been entered in a cash book at the full value of the debt.
Okay, what is happening there? How much did we receive from the person?
3,000.
For how much? The person is giving us
We received
3,000
3,000
in respect of how much? How much is the person
from
owing?
Vista Million.
How much is the person owing the company?
3,300.
Okay, so we received 3,000. Okay, the cash received is 3,000. So we should have debited our cash, the cash book, which is the bank column with 3,000, isn't it? Okay,
Yes, please.
but they are saying that it has been entered at the full amount. The full amount is what?
3,300.
Okay, so it means that if you count, this is how the transaction has been done. So let's say that we have our cash book here, or let's say we have the bank account. Okay, because we are only paying attention to the bank column. So we have the bank accounts here. Okay, so the entry should have been the cash that we receive, isn't it? We name the name of the customer. So let's say the customer is school fee. We should have entered only what? 3,000, isn't it?
Yes, please.
Okay, but what happened? We have entered what?
3,300.
Okay, it means that we have done what? We are overstated the amount. So this place should be 3,000. Now we are putting 3,300 over there. What do we do to make it 3,000 now?
You subtract the 3,000 from the 3,300.
So that we subtract 300. You're supposed to enter 3,000, not 3,300. So it means that we're supposed to enter only 3,000 over here, but we have entered what? 3,300. It means that we have to subtract 300 by putting the 300 on the what? Credit side. Is that correct?
That's right.
Okay. So what happened is that you see the 3,300 is part of this one. So what you just put error here. Okay. So, or you can put discount allowed. That's supposed to be a discount, but it has been captured. So you can put maybe discount allowed or error. It's just an error. Okay. Or you can put discount allowed over here. Anything that you put over there, they can. So error relating to the customer. So we have to reduce it over here because the amount that has been captured was 3,300. We have captured that amount before getting this figure. So the 3,300 is part of this one. The 3,300 is captured before getting this figure. So we have to go and take the 300 from that particular figure. Is that okay?
Yes, sir.
Okay, let's go to the other one.
A dividend of 650 cedis from PG Limited had been paid direct to the bank.
Okay, so if they are paying dividends, okay, if they are paying dividends, the company is receiving a dividend from a different company, isn't it? Okay, if you have shares in my company and I have paid the money into your bank account, is it going to reduce your bank account or is it going to increase it?
You want to increase it.
So if you are not aware of this, you also have to, you're also keeping records of whatever is happening in the bank. So as soon as you are aware of this now, what are you going to be doing to the money that you have? Will you be adding the 650 to it or you'll be subtracting?
Add it to it.
Okay. So this will be the dividend received will be a debit to the bank. So we have dividends received. Okay. So dividends received will be 650. I hope you are okay with that. Okay. It's not a big thing. You see, you just have to understand the effects. Okay. Let's come here.
The bank deducted a total of 125 Ghana cedis as its charges.
Okay, so that is what is that? Bank charges, isn't it?
Yes, yes.
Bank charges, is it going to be reducing your bank balance or it will be increasing it?
Reducing.
So So the corresponding entry should also reduce your what? Your cash balance. So we have bank charges. If you have 10,000 in your bank account, and the bank has charged you 1,000, you'll be having 9,000. So the 10,000 you think that you're having in the bank, you also have to reduce it by the 9,000 in your books. So that will be 125, isn't it?
Yes.
Okay. So let's look at the last one there.
The bank had credited a check of 3,560 cedis of Daiwili in error to Daiwo account.
Okay. So you can see that this particular check is for what? It's for a different customer, isn't it?
Yes.
But it has been credited to the company's account. Credit, if they say the bank has credited, it means that the bank has increased. So whenever you see something in credit, the banks, you see if they pay you, what normally what is the message that your bank will send to you? They will say that a credit transaction happened on your account. Okay. But if they have done a deduction, they will say a debit transaction happened. So if the bank is debiting your account, it means that they are reducing. They are making payments. If they are crediting, it means that they are increasing. But this particular amount, does it belong to us? This
No.
particular amount, you can see that this particular amount will be increasing our bank account, isn't it? Okay. But if this particular amount should be a legitimate transaction, then we go and add it to our bank balance because it's an increase. It is increasing our what? Our balance at the bank. So we should come and add it over here. But this is not a money for us, so we cannot record it in our cash book. So we have to use it to adjust or to reconcile our cash book balance with the what? With the bank statements. Okay. So let's come to the balance carried down. What is the difference there? I'm having 13,605. Can someone confirm the balance carried down? Confirm.
That's correct, sir.
Okay. So let's go to the bank reconciliation statement now. Okay. The bank reconciliation statement. Okay. The bank reconciliation statement. You see, all things being equal. Okay. All things being equal. After you have adjusted, all things being equal, after you have adjusted your cash book, the cash book balance should have been the same as what? As the bank statement balance. But you can see that it's still different. There's something that happened again which has not been captured into the cash book. We are reconciling. So you see that your bank statement balance is 14,265. Okay. After everything has been done, okay, after you have adjusted the necessary items, your adjusted cash book balance should be the same as the bank statement balance. But you can see there's still a difference. So it means that there's some certain transactions that were not captured in the adjusted cash book balance or in the adjusted cash book. And those are the items that we use in preparing our bank reconciliation statements. Okay. So we always start with our balance as per adjusted cash book. What is the balance there? What is the balance that we have? 13,605.
605.
Okay. So what do we do? Okay, you can see that certain figures. Okay, let's come here. I'm sure this is where you understand this. Okay. The 6,500. It was a payment that was made. We have paid the money to the people. We have given them a check. So we have subtracted that figure from our cash balance. Is that correct? The 6,500. That has been subtracted from our balance. Is that correct?
Yeah.
But has the bank also
Yes.
subtracted this figure from the balance that we have at bank? Okay.
No.
So since this has not been subtracted, it means that we should not subtract it in the first place, isn't it? So it means that this balance should not even be subtracted from the bank from our account because the bank has not subtracted. the bank has not subtracted it. So it should not be subtracted in the first place. So we have to reverse it because this transaction has not been done by the bank. So we should not also not do it so that we can get the balance that the bank is having. This has not affected the bank balance. So it should not affect our also our cash book balance. So you go and add your unpresented check. So you bring your unpresented check here. You have unpresented check of 6,500. Okay. All right. Let's come to this one. The last one, the bank had credited a check of 3560 of Dawili in error to what? Dawili accounts. So what is the effect of the 3560 on our bank statements? Is it increasing or reducing?
It's increasing.
So has the increase been captured in our cash book?
No.
Okay. So since that will be increasing, we also assume that we are right. We are what? We are recording this. So the amount wrongly credited will also be added because this has been added to our bank account. So amount wrongly credited. So amount wrongly credited. That has been added to our bank statement. So we also have to come and add it. We are just trying to what? You see, those things that have been done by the bank, which were not done by us, let's do it. So we want to be, okay, you are saying that you have two boats, okay, but you have given one out. Okay, you are left with one. So I also have two. If I want us to be at the same level, I also have to give one out. So we just want to be at the same level. That is the reconciliation that we are talking about. So those things that have been done by the bank, which were not done by us, we have to what? We have to do it. Those things that were done by us, but were not done by the bank, we have to reverse it because it has not been done by the bank. So it is reducing our what? Our balance. So we have to reverse them because it has not been captured by the bank. That's what we do. So that would be 3560 here. Okay, what are we having?
160.
Okay, so we have 160. If we add, what are we getting?
23665.
Okay, 23665. Okay, let's come to what we call uncredited check. Okay. Okay. The uncredited check, let's pick them one by one now. Okay. So those two check that we are having 3,400 and 6,400. These checks has been entered in the cash book, isn't it?
Yes, please.
Okay, but were any transaction done in respect of them by the bank? For the month of February, for the month of March, has this particular check been entered for the month of March? No, it was done on 2nd.
No, please.
Okay, but what did we do to this amount? It was added to our balance in the cash book, isn't it?
Yes.
Okay, but since this has not been done by the bank, it means that we should not record this particular transaction in the first place. So we have to reverse it. It was added, then we now have to come and subtract. So we have the unpresented check. You just put the figures there. So you can put the check number there. So you have check number. So check number what? A001. That will be
301.
3,400. Then the second one is what?
X224.
S224. And that is 6,000. Okay, so what will be the total unpresented check?
9,400.
9,400. So if we subtract it, what are we getting?
14,265.
Okay, so that will be the balance as per adjusted cash book. Okay, balance as per adjusted cash book. So mostly we adjust the what? The cash book against the bank statement balance. Okay, sometimes the question can also ask you to adjust the bank statement balance and against the cash book balance. So what you do is that you always start with this one. If you are starting with the bank statement balance, what you do is that, okay, what are the transactions that should have been added? which the bank has not added. The bank will come and add them now. What are the transactions that the bank should have been subtracted, which the bank has not subtracted? So if we are to start with the bank statement balance, so it means that, okay, we are now starting with the bank. The bank's supposed to enter 3,400, 3,400, but they haven't done that. So we come and add it to this balance because the bank should credit our account with the uncredited check. So the bank will now come and do things that they haven't done. So the bank will credit the 3,400 and 6,000, we add it. Then the bank's supposed to what? Pay 6,500, the bank will now pay it. The bank has wrongly credited our account. They have to reverse it. But mostly we do the adjustment by starting with the adjusted cash book. So you just have to pay attention to how the question is being asked. So they can ask you to prepare a bank reconciliation statement where you'll be using the, so if they ask you, prepare the bank reconciliation statement, you always use the adjusted cash book. Let's use the question number 3 and another one and see if we can start. Okay, so let's look at the question. Okay.
Okay, question 3. Rand Limited was preparing its reconciliation for the month of November 2018. Noted the difference between its bank statement balance and the balance on the bank account in its general ledger. The bank statement shows a balance of 1,796 cash at bank. The balance on the bank account cash book in the general ledger was 674 Ghana cedis credit.
Okay.
The following reasons accounted for it.
They will ask you for, also they say prepare adjusted cash book. This one, the answer format should be clearly indicated by each entry is a debit or credit. Okay, prepare reconciliation. So, okay, so let's come to okay, prepare reconciliation of the bank statement balance to agree with the cash book balance. Okay, so this one we will start with the bank statements because we want the bank statement balance to agree with the cash book balance. So you can just start, you can use any format at all. So the bank statement should be the same as the cash book balance. We are going to be using the default one too. So what you do is, since they will be asking you to do bank one, you always have to prepare the adjusted cash book. So let's come to the adjusted cash book. Before you even read the requirement first. So adjusted cash book. Okay. So we'll be having debit credit. Okay. So the cash book balance, where is it? Is it debit or credit?
Credit.
It's credit. So you go there and have balance brought down here as credit. Okay. So how much is that?
674.
674. Okay. Okay. So, but if they didn't say anything about the bank balance, they just say the bank account balance in the cash book is 674. You just assume that it's debit balance. But if it is credit, they will tell you credit. But if nothing is being said, that will give you that will be a debit balance. So take the following information now.
Okay. The following reasons accounted for the difference. 5 checks paid to suppliers have not yet been presented at the bank. These are check number 12005, 4,225. Check number 12006 2282 Ghana cedis. Check number 12007 3283 Ghana cedis. Check number 12008 5854 Ghana cedis. Check number 12009 609 Ghana cedis. Check number 12005 was lost in the post and was cancelled. Nyantechi have not yet recorded the cancellation of the check.
Okay.
2.
No, let's deal with that one first. Yeah, let's do with that one first. Okay. Let's do with that one first. So say check number what? 120005
Check number 12005 was
was
lost in the post and was cancelled.
okay. So this check, what is the amount on the check number? What is the amount?
4,375.
Is the company that is paying or the company is receiving?
It's
Who is
paying.
the company that is paying, isn't it?
Yes,
Okay.
please.
So the time that we are paying, this amount has been credited to the bank, to the cash book, which is the bank account, isn't it?
Sure.
So now we have canceled it. Did we pay?
No, we didn't pay.
So it means that this check has to be what? Has to be that this transaction has to be canceled, isn't it? Okay. So
Yes.
what happened is that the time that we are paying in our bank account, this is what we have done. Okay, this is what you will do. So you have maybe check number. Let's say the customer name is now Kofi. So 4375. Okay. But we have canceled this check, means that the person cannot cash out the check again. So since we have canceled this check, it means that we are still owing the person. We have to reverse this transaction. Reversing this transaction, what do we do?
You debit it.
So we now come and debit this
Debit the
one.
bank.
Okay. So you now come here and have a dishonor check. So you come here, because the first transaction was credited. So you now reversing it because you have canceled the check. So we have dishonor check of 4375. Are we okay with that? Are you okay with that?
Yes, sir.
Okay. Okay. Let's come here. Okay. Let's come to the second one, please. Can you take the second one first?
Check number 120010 was incorrectly recorded in Nyantechi's cash book as 2,975 Ghana cedis. The check was correctly debited to the bank statement on 5th November 2018 as 2,359 Ghana cedis.
So it means that we have overstated the amount, isn't it? Okay.
Yes.
The correct amount was 2759. But how much was entered in the account? 2957.
Yes.
Okay. Error of so that can be an error of overcast. It can be error of transposition. Anyhow, if it is transposition, will always result in an overcast or undercast. Let's come here. The time that we are entering, this is how the transaction has been done. Okay, so this is our bank account. We are paying, isn't it? We are paying, isn't it?
Yeah.
You
Yes,
can see
please.
they are debiting. So that if they are debiting means that we are paying. If the bank is crediting means that we are receiving. So what was the transaction recorded in the cash book? Let's say the person's name is Amma. Okay, we recorded what? 2957, isn't it?
Yes, please.
But what should have been the actual amount?
2759.
So what is the difference? What is the difference? The difference between
198.
198. So it means that we should have come here and take 198 from this one so that we can have the 2759. But we don't do subtraction accounting like this. So what do we do with this 198?
We're going to we're going to debit to the bank account.
Okay, so it means that this, we have 2957 over here, but the figure should have been 2750. So we now have to come and what? Put 198 over here to reduce the 2957. This has been already been recorded. It has been recorded before getting this particular balance. So it means that the 295 is this one. So we have to reverse that particular one. So you can just name it what? You can just name it error or overcast. Okay. So overcast, you just put a figure here, 2957 minus 2759. We are having 198. Are we okay with that? Okay. Let's go to this one is all about the understanding and the issue of a double entry. So the accounting is just a double entry. If you understand a double entry very well, that's okay. This particular check, is it unpresented check? Is the bank here to enter it? It has already been entered, isn't it? So it's not part of the unpresented check. These are the unpresented check over here. But the first one will not be part because it has been cancelled. Okay, let's go to the third point. Or the fourth one.
Bank charges of 2,681 was debited by the bank on 29th November 2018.
So what do? The bank charges, where will it go? Debit or credit to the adjusted cash book?
The credit side of it.
Credit.
Okay. Some of the items you don't have to think about them. Okay. The bank charges is an expense, and that has reduced our bank statement balance. So that will be 2691. Is that correct? Okay. Let's move on to the next one.
The customer's check amounting to 2,240 cedis was returned by the bank in November, as the customer had insufficient funds in his account. Nyantechi is yet to record the return check in their books.
Okay, so what is that? What is the name given to this check?
The standard check.
Okay, so who received the check? Is the company, isn't it?
Yes.
Well, so the time that we received the check, we debited our account. Is that correct?
Yes.
Okay, so we have the 2240 over here. The time that we received the check, we debited it. But now they are saying that the check has been returned. It means that the customer did not pay us, isn't it? The customer is still owing us. So we have to reverse that particular transaction by crediting our cash book. Are we okay with that?
Yes.
On a check. So is the understanding? You don't have to memorize anything. Okay. That is how much?
2240.
2240. You don't have to go there and be filling. I just wish I should be able to finish everything with you. If care is not taken, you can only score more than 80. Okay. If you really learn, because it's just the understanding of these issues. Okay. Let's go to the last two.
Deposit of 5,960 Ghana cedis entered in Nyantechi's cash book on 30th November 2018 was credited on the bank statement on 3rd December 2018.
Okay, so what check is that? What is the name given to that check?
Uncredited check.
So uncredited check. So that will not have any effect on the. This is a reconciliation figure. That will be a bank reconciliation figure. Let's come to the last one.
The bank has incorrectly credited Nyantechi's account with an interest of 1,540 cedis. This is interest on a deposit account held by the managing director personally. The bank had not corrected the error by 30th November 2018.
Okay, so they say the bank has incorrectly credited Nyantechi's account. So it means that this is an income, isn't it? The interest is an income, but the interest does not belong to us. If it should belong to us, what would have happened? We'd have debited it to our adjusted cash book account, isn't it? But this is not for us, but they have added it to our accounts. Okay, so if we are going to do, The bank cannot reverse this since the bank was the one that has added this one to our. We also go and add it to our balance, but this should not go to the adjusted cash book balance because it's not for the bank. It's only those transactions that are relating to the entity that will go to the adjusted cash book balance. So if this should relate to the entity, we are going to have interest income, which will be a debit, but this is not for us. So we have to, this will be a reconciliation item. This will be a reconciliation item, or indirectly, the reconciliation items are those items that will not find their way into the what? To the adjusted cash book. Those are the items that we use. So let's find our balance here. Let's find our balance here. So 674 plus 2691. 2691. Yes, please.
Please, the bank charges is 2681.
Not 91. Okay.
Yes, please.
Okay. 2681. Okay, so let's add 674 plus 2681 plus 2240. Okay, so I'm having 5595 as the total. So let's come here 4375 plus 198. Okay, minus 5595. I'm getting 1022.
Yes, that's very good.
Okay, so that will be an overdraft, isn't it?
Yes.
Okay, so this is where I will show you that anyhow you present this will be the same figure that you are going to be getting. So let's come here. We have an overdraft balance drawdown of 1022. Okay, let's go to the bank reconciliation statement now, which will be the B. So we have the bank reconciliation statement. Okay, so what you have is that, okay, so let me see. Okay, so we have, okay, so we have the balance as per adjusted cash book. Okay, that was an overdraft of what? 1022, isn't it? Okay, so what you do is you still add your unpresented check because there are certain amounts that has been subtracted that should not be subtracted. So you add it. But let's go to the check numbers now. We have plenty check numbers there. So let's pick them. The first one will not be part, isn't it?
Yes.
Because the first one has been cancelled. So we have the check numbers here. So we have the check numbers here. So the first one is 12006. How much is that? Two two 2282. Is that correct? Okay, so we have 2282. Okay, so we have 0007. How much is the amount there? 3283. 3283. So let's have 008. What is the check number? What is the amount there? 854. Okay. 854. Okay, so we have 0009. How much is the amount for 8009? Okay, that will be 609. Okay. If we put them together, what are we having? I'm having 7028. Is that correct?
Yeah.
Okay. there was a credit entry to the bank, which, so let's come to this place. The bank has incorrectly credited Nyatechi's account with an interest of 1540. This interest on deposit account held by the managing director personally. The bank had not corrected this one. So you can see that included in the bank balance over here, they have what? Added the 1540. So 1540 has been added, but this has not been captured by us. But this is an increase. It is increasing our bank balance. So this will also increase our cash balance. So we go and add it back to our balance as an increase. So you come to amount wrongly credited. Okay, that will be 1560. Okay, let me just put this figure over here. So 70728. So let me put a 1560 here. What will be the total addition? $1540 rather, sorry. Okay, what will be the total amount that we are adding now? What is the figure that we are adding? I'm getting 85. Okay. But this is negative. So what are we going to be having? I'm having 7546. Is that correct?
Yeah, that's correct.
Okay, this is negative. So don't add. It's negative. It's an overdraft. So it will be negative, then you add. So it will be negative, then plus, so that it will be a reduction. Okay. Then you count to what we call uncredited check. What is the amount for the uncredited check in the question? What is the amount for the uncredited check in the question? A deposit of 5,950 entered in Nyatechi's cash book on 30th November 2018 was credited on the bank statement on 3rd December 2018. We are preparing this for November. So this has not been entered for November, but we have added it to our balance. But this has not been captured. This is not part of the bank statement balance. So we have to reverse it because it has not been done by the bank. So we go there and have 5950. So we subtract 5950 from here. What is the balance that we are having? I'm having 1596. Is that correct? Is that 1596? Okay. Please, can we confirm the 1596?
Yes, that is correct.
Okay. So please, you don't have to do bank reconciliation and get different figure. If you get a different figure, so you can see the bank statement balance here. The bank statement balance over here is what? It's 1596. So
1596, yeah.
you can't do a reconciliation. You can't do a reconciliation and be having what? A different figure. Then it means that some of your entries are not good. Okay. But what are you going to be seeing in the books? Okay. What you see in the book is that you see the uncredited check. You can see that it's a reduction, isn't it? Okay. So what you see is that some books will add, if it's overdraft, some books will add what? Will add the 5950 because they are all overdrafts. They are all going to be having the same effect on the uncredited check. So they will add the 1022 plus 5950. Then they will come and subtract the 8568 from it. So they will have this to be negative. They will add the two to be negative because they are all negative. So they put it together to have total negative. Then they will now adjust the what? The 8568 from it. That is not bad. You can also do the way we do the positive one, but just have to make sure that your balance over here, you make it negative. You'll be getting the same answer. You just have to make it that you'll be making a negative. So some books, if you look at them, they were saying that if you have overdraft, they will add the uncredited check to it, the amount wrongly debited, then they will now be subtracting other figures from it. Please, I hope we are now okay with what we are now okay so far with the two questions. You can pick bank reconciliation statement and be able to do something. But let's pick the okay question number 6. They can also give you a question like this that you have to now trace the items yourself. Okay, so yeah, this one you don't have to do anything. The following are extracts from the cash and bank statement of IBQ Limited for the month of April 2012. Okay, so these are the bank balances there. What do you do? How do you go about this question? Okay, we know that items that we are seeing at the debit side of the cash book, where would they be found on the bank statements?
On the credit side.
Okay, at the credit side. So what you do is that you count your credits now. So you come and trace some items there and see all those ones. So you can see that the balance 60,000, 60,000. Okay, we have paid somebody. Okay, so you just tick. So we have paid Yao. You can see that this has been reflected over here. It means, isn't it? The 2,200 has been reflected over here. Is that correct? Credit and debit, 2,200. Can we see that? Please, are we here? 2,200 against 2,200 on a credit side.
Yes, sir.
yes.
What does it mean? What does
It
it mean?
means
Yeah.
both entries have been effected, so no need to consider that one.
Oh, no, it means that the person has presented a check for payment. So this is non-presented check. It's only those entries over here that are not captured over here that will be treated as unpresented check. So this person has presented a check for payment. So you just ignore this one. This has been captured already. Let's come to this place. We have Mark Abuaji, 14,000. This is credit. So if you come to the debit side over here, can we have Mark Abuaji over here?
Yes, sir.
Okay, so it means that this check has been credited, so it will not become uncredited check. Let's come to this one. We have a Suma, 5,120. Can we see the same figure on the credit side? Okay.
Yes, sir.
This has also been what presented for payment. So those transactions have been captured. Okay, so that is how you mark it. Then you now go ahead with your the statement and now move on. Okay, let's come here. We have 4,900. 4,900. The name is Yao Kesewa. Can we see the same thing on the debit side?
Yes, sir.
Okay, it means that this has also been credited. I'm seeing 900 on the credit side. Can we see the same 900 on the debit side of the cash book?
No, sir.
So that is what? That is a credit transfer. Okay, credit transfer, they have transferred money from one account to the other one. So we cannot start with our adjusted cash book. So we cannot start with question number 6. We cannot start with our adjusted cash book. So adjusted cash book. Okay, so we always start with the closing balance. The opening balance has already been captured. So we just use the closing balance to use it to adjust those items that has not been captured. So what is the balance that we are going to be using? What will be the balance that we are going to be using? What will be the balance that we are going to be using for the adjusted cash book? What balance are we going to be using?
2,000.
No. If you are using,
The 75,
yeah, if you
75,
yeah,
75,000.
okay, if you're using 60,000, then you are saying that this transaction has not been captured, and that is wrong. All these transactions, some of them has been captured, some of them has not been captured. So it means that if we should have known the credit transfer. The credit transfer should have been added to this figure, and this balance will be plus 900. So just start with this balance. It is this balance that will be increasing by 900. So we always start with the closing balance. Okay, that will be 75, 720. That will be a debit balance. So 75, 720. Okay, so you always start with a closing balance. It is a closing balance that will be adjusted, that will be increased. 75, 720. Okay, how much are we? So we are having a credit transfer, that will be a debit. So this one is the easiest one. So you don't have to now think about how it will be done. So credit transfer of 900. Okay, so we move on. We go to the next one. We go to the next item. Okay, so I'm still on the credit side. Peter Mensah 9780. Has that been captured in the cash book?
Yes, please.
Okay. So you can see that we don't have any transaction on the credit side again. Is that correct? Or we don't have any transaction on the credit side again. Okay.
Please, you don't have.
So it means that Selassie Kofi has not been captured. So that will become uncredited check. Is that correct? Selassie Kofi has not been captured. 3,800 has not been captured. So that becomes
Yes.
uncredited check. We have done the transaction, but the bank has not entered anything. So that becomes uncredited check. Okay, let's come to the debit side now. I'm seeing 160 in respect of bank charges. Has that been captured?
No, please.
No, sir.
So what we do is that you can see that this is on the debit side. So if you go to the cash book, it should be on what? Credit side. So bank charges of what? 160. Is that correct? Okay.
Yes, please.
Let's come here. I'm seeing insurance. Insurance of 1,250. It means that they have paid insurance on our behalf. Has that been captured in the cash book?
No,
No, sir.
please.
So we have to go and capture it. So we have insurance of how much? 1,250.
1,250.
Okay. So we have captured this one. Let's come to the
So,
next one.
would this be a standing order?
Yeah. They can make it, yeah, because we are giving them the order to pay and on our behalf anytime. So that can be an outstanding order, or they can just make it a standing order. But if they didn't write the standing order, just write the name of the item, insurance. Okay. Unless they are asking standing order, they are saying that it's a standing order. Okay, the next one is the Provident Fund. They are also paying an amount of money on our behalf. We are making a contribution to a fund. So they have done 2,750. Has that been captured in the cash book?
No, please.
So we also send the Provident Fund over there of how much? 25 what?
2570.
Okay, 2570. So let's now total this. So 75720 plus 900. I'm having 76620. Balance carry down will be how much? Minus 160 minus 1250 minus 2570. I'm having 72,640. Is the balance confirmed?
Yes, please. 760.
Okay. So what do we do next? Okay, so we move on to what? The bank reconciliation. So what will happen is that you will try the bank reconciliation, then I'll confirm the figure for you because I was the one doing everything for you.
Okay, sir.
So let me project this one for you so that you can try the bank reconciliation. So the figure is here, but let me show the question to you so that you can. So the balance is that one. Let me also get my figure and put it there before your own. This I'm sure this is 75. I'm getting a difference on what 75, 720. So let me re-add. I'm getting a difference of 100. So 75, 720 plus 900 minus 160 minus 1250 minus 2570 72,640. Okay. Okay, I'm okay now. Okay, so let's do that together. Let's do that together. So we have the bank reconciliation, around reconciliation statements. So you always start with okay, so the balance as per the balance as per adjusted cash book. So that was 72. What did you get? 72,
640.
640. Then we add what?
Unpresented check.
Okay, so the unpresented check, we can put the figure together, or you can mention the name of the people. Okay, so you can put their name there. Unpresented check. So unpresented check, what are the names of those people?
We have Osa, Ejay,
Okay,
and Mate.
so we have the Osai, AJ. How much is this? How much is
7,600.
okay? So the second person is what?
Mate.
Okay, so we have the Mati. Mati is how much?
1,840.
1,840. Okay, so you have
Mhm.
1,840. So the total will give us what?
9,440.
Okay, so 9,440. If you put them together, what are you having?
82080.
82080. Okay.
Yes, please.
So the uncredited check, we subtract. What is the name of the person?
The last Kofi.
Okay, so we have the Selassie Kofi there. Selassie Kofi,
3,800.
okay, 3,800. So we have 3,800. How much are we getting? 78,280.
78280.
Okay, so that will be the balance as per the bank statements. As per bank statements. Okay. So if you check your question two, you have to be having the same value. So that will be 78280. That's how we go about it. So we have solved 3 questions. And please, what I've told you, so if you are willing for the dawn, you can, maybe we can discuss that tomorrow so that we use, tomorrow I have class. I have to class tomorrow dawn. So maybe Thursday and Friday, so that we can finish with maybe the control account and then the control account and correction of errors. So we now know that we have final account and ratios. Ratios, we can use like 1 hour to do it because it's full of formulas. For your own, they will not ask you plenty questions. Please, they can ask you the reason for carrying out what? Bank reconciliation. The first one is to dictate what? Fraud. So it might be that the difference that is causing that means that accountant has chopped the money. So the first one is to dictate what? Fraud. Another one is also to determine liquidity. We want to know whether we have cash. We also want to know whether we have cash. Okay, so you can check for the reasons for carrying out a bank reconciliation statement. Okay, so they can also ask theory question for that. Okay, so they can also ask a theory question for that. Detecting fraud. I want to know our liquidity position, our cash. Okay. You also want to reconcile bank errors. You have to ascertain your bank charges for the year so that you can charge it to profit or loss. There are a lot of them. So we also do that to also identify what we call style check. Check that after 6 months they will not become. So you might having some check over there which will cannot be cashed out again. So we know the checks that are not yet credited so that we can track them and those things. So they can ask you for the reasons for what? For preparing or carrying out bank reconciliation. And they can also ask you the factors that cause the discrepancies between the cash book balance, which is the bank column, and the bank statement balance, which are the uncredited check and those ones that we have looked at. So that is it. Okay. So if we don't have any question, and I would like us to end it over here for this evening. And you think about it, and let's talk about that and see what will happen. Yeah, Senior Addison.
So concerning the meeting, I suggest you give us a date because we are students and we are the teacher. So it has to be, because if you have to decide, many people will be as